Are all the bad news priced into the airline business? Let's find out. First off, read this disclaimer carefully. In this video, we will look at an ETF, and it is in the industrials group. When we look here at the average performance for the industrials, it is actually pretty decent. Certainly a very mixed picture. You see here that, the global airlines ETF that we will look at, not that bad from the 52-week low, but it is one of the worst performing as far as the 52-week high goes. You can see that the one that is down the most is shipping. That's another area that we can look at in the future, but I'm not really seeing the end of the worries yet in that business. But something could be afoot for the airlines. Okay, so here you have the seasonality of the JETS ETF. You can see here that November is actually one of the strongest months, and November is right around the corner. Let's look at it against the S&P 500, the ultimate benchmark. And then we do see, if we can get a few years here, November is actually, there usually is an outperformance if we compare it against the XLI, which is the industrials ETF, like that. Yeah, October, November, December, like basically this is a very strong season of outperformance. So the name of the ETF is US Global JETS ETF. JETS is the ticker. Let's first here look at the charts. So far the seasonality suggests a more bullish take on the airlines. I probably do not need to explain why the airlines are down that much. Obviously, this is due to the lockdowns, due to the virus. The thing is that there's a change in the sentiment. There seems to be more fatigue as far as the lockdowns go. We are entering a season now of the flu, influenza, you name it. Hence, it's going to be very difficult, I think, to keep locking down the economy. Hence, I do think the bad news are likely priced into this business at this point. You can see here that before the lockdowns, it did actually form a bit of a rounding bottom pattern, even though it was towards the high. The similar psychology was in play, so we were very close to having a breakout and then complete collapse. But it's very important to look at this, because this is before the bad news hit, and you can see that there was this change in sentiment. People were becoming more bullish after having been more skeptical, which means there is hope. There was hope here, and we have seen a bottom being formed. It's been certainly one of the weaker sub-industries after the plunge, for obvious reasons, but there is this overall recovery in development. You see a bit of a rounding bottomish pattern, and if you look here at the accumulation distribution, it is actually it is corroborating this rally. So there's been an uptick here in buyers. So that's rather interesting. There's a minus 33% negative correlation with the S&P 500. Let's go here to the daily data points, loading the moving averages. It's very interesting now. First, let's look a bit at the RSI. You can see here that this ETF, it doesn't like to be overbought or oversold. You see that there's a lot of dynamic action here in the RSI, which is very tradable. You can see that it also moves in these cycle patterns. So this is one that has been fantastic for long, short strategies. I mean, the pattern, let's actually look at the cycles here. I mean, they were tremendous. Look at how consistent the cycles were. So you could be like long, short, amazing. So let's now look at the moving averages. Okay, so you see here, you have this rounding-ish pattern. We are having support here at the blue 100-day moving average and resistance at the 200-day in red. Hence, there's definitively a bit of a standoff here between the bulls and the bears. We were recently rejected at the 200-day. Obviously, It is very important for the bulls now to break out above the 200-day. If they do pull back a bit more, they definitively want the 100-day to hold. If we do get a break of the 100-day, then yeah, the bears could start to become a bit more ambitious. But given that we aren't that far away from these lows where everything was super bad, I do think that the short sellers are looking for better opportunities. It makes more sense for them to look at, the high-flying post-lockdown industries and sub-industries for shorting opportunities. As things like global jets and the shipping business as an example, it doesn't really make sense to become super bearish at these levels. You can see that after the plunge, there actually has been a 76-ish positive correlation with S&P 500. You can see here with the accumulation distribution line, it is significantly above the levels back here, which means that there has been a significant uptick in buyers. So yeah, that's interesting. That's interesting. So there are people loading up on positions here. You also, of course, need to take into account that, the price here of the ETF has been halved, more than halved for a period, which means that you needed to, in order to get the same position, you need to buy more shares. But you could also make the case that due to the plunge, people were having smaller positions as well, as far as talking about, the mutual funds and those actors that, have the biggest impact on the market. Okay, so let's look a bit here. You can see that there are options available. It is also shortable. Performance, year to date, minus 43-ish%, obviously bearish. You can see here that there's been a breakout above some resistance levels here that Finviz has painted in. Expense ratio 0.60%, that's on the higher end of the spectrum, but there simply isn't any competition, really. The PE is at 13, so that actually isn't too bad. The dividend is 2.1%. That's a decent dividend. Let's look a bit at the holdings. So Southwest Airlines, a bunch of airlines here. Air Transport Services. Let's break it down a bit more. So you can see here that there actually is some decent balance here between the different market caps. Regional breakdown, very heavily tilted towards North America. It also means, though, because of this heavy lean towards North America, the election is a pretty big deal. It is very clear that Trump wants to, open up the economy, we are done with the virus and blah, blah, blah. So he obviously will be very bullish for the airline business. Biden would be definitively far more bearish because he's been very, very clear that he, the Democrats have really been pushing the virus. So that's something to just be very aware of. This could actually be very sensitive towards the election. Market tire breakdown. Yeah, country breakdown. Yeah. Okay. Let's quickly look at the fund flows as well. Yeah. Looking at the last 3 months here, there's been more green than red. Okay, so basically to sum up my take here on the JETS ETF. I'm speculatively bullish at these levels, but I do think it is very speculative because this is an industry which has been hit very, very hard. And you also need to take into account that it is hypersensitive as far as the election goes. Potentially hypersensitive. The logic is pretty clear about the political factors. Whatever you do, of course, you don't fight the trend, and may the trend be with you. And the benefit of getting into an ETF vis-a-vis the actual stocks is that an ETF is diversified.